Commentator Joseph Busher joins us now. Joseph, thanks very much for your time. I suppose everyone is waiting for most of the investments to claw back the losses we've seen over the last 2 months. I mean, we saw some gains this week on the local market, but there's still a lot of catching up to do.
A lot of catching up to do indeed, Devon. I think the last 2 months, as you said, have been devastating for the market perspective. We're touching 80,000 index level on the all share in South Africa. Now we're sitting at 66, which is about 24% down for the year. There have been lots of pressures across board, and I think the war in Ukraine, the COVID restrictions in China, and we've got our own bottlenecks down here in SA. The truck drivers, blocking the roads, which prohibits companies going into Durban, which is our biggest port, and Eskom, which is another big challenge here. And now you've just been talking about the water shortages in Mandela's Bay, which certainly does impact productivity and hence our manufacturing output, which will affect the GDP.
Yeah, I want to take this back just internationally for a moment here. A lot of talk about a possible recession, especially after that US interest rate hike, which was a very steep one. Could the global economy see a recession? What's your take on this debate?
So certainly, I think there is a massive chance on that. Goldman Sachs is expecting that the chances of the US going into recession is sitting about 48% cumulative probability in the next 2 years. That's quite high. And I think the pressures are really coming from all fronts. We're seeing inflation remaining elevated, and this is really just across the board in terms of the cost of living, whether it's energy issues, in transportation, production, electricity. So all those things really are going to put lots of pressure as you see the global economy, in particular the developed ones, being under pressure. We also saw that the Chilean peso, the currency, is at its lowest against the dollar. This is as copper prices plunged, and also we saw iron ore 25% down in the last 1 week. So all those things are going to add to lots of pressures.
Yeah, it will be interesting to see what happens with that inflation figure tomorrow, albeit that it's 2 months old, but it certainly is an official one. It's not just South Africa that's struggling with inflation. All right, Joseph, so ABSA is saying today it expects a half-year profit of about 20% for the 6 months. It says customer loans are growing despite interest rate hikes. I mean, what do you make of their trading update and what it says about the consumer? It's always interesting to see what the bank says.
Very good numbers. I think you know that we've been coming from a low interest rates environment, and there has been some increases in interest rates. So their interest income will certainly improve because most of those loans won't be fixed loans, so there will be variable interest. So as interest rates go up, they collect more from housing loans, car loans, and so on. But what was also interesting with their update is that their non-interest income, insurance and other, really have certainly doubled and increased. So that has been good for them. Headline earnings per share, they're expecting about 20%. And I think the whole sector really is just so positive. But we'll have been able to see what happens in the next 6 months, the second half of the year. If interest rates rise higher, what will also happen in terms of their loans, whether they will be able to keep the credit losses to where they are.
Yeah, so much of a bank's financials depend on the economy and consumer health. You're quite right. Well, that was market commentator Joseph Busher. Thanks very much for talking to us. Right.